Today, we're talking about permanent restrictions and board designated funds. Now, last time we talked about unrestricted net assets and temporary restrictions. So most of the restrictions that we deal with in net assets and contributions tend to be from temporary restrictions. But there are also times that a nonprofit may receive a contribution that stimulates that a payment is permanently restricted or perpetually restricted, or the board may designate funds for a specific purpose or for a reserve. So here we're going to dive deeper into that. We're going to first talk about permanent restrictions. How do we account for them? What are some things to be on the lookout for? Run through an example, and then we'll touch upon board designated and a best practice there, and then we'll wrap it all up. So let's get started. So net assets with donor restrictions in perpetuity. You want to retain the donor agreement and document all stipulations. So when a nonprofit receives a contribution that restricts the use in perpetuity, the nonprofit needs to ensure that it retains the agreement and documents all the stipulations within it. I like to think of maybe you have a master document that lists all the notes. Maybe you have even, this is in your net assets roll forward. So everything you have in there has notes attached to it that say the corpus is this, and we need to maintain this in this types of investments. We are allowed to use this much of the earnings, that sort of thing. So most perpetually restricted donations are made to support something such as scholarships or some sort of a specific program. But sometimes you do see them for general operations because somebody really wanted to support the organization, didn't want it to be just for one specific program, so they say to support the organization. Generally, these types of restrictions, like I said, are going to restrict the corpus, which is the initial donation, and maybe additional donations to that corpus. And that has to remain untouched and set apart, generally in an investment account or in a separate account. It needs to be tracked separately. Generally, the earnings made can be expected to be used for the specified purpose, and it should stipulate within your agreement if you have to reinvest any of that into the corpus. So when you get earnings, if they're for a specific purpose, you would record those into temporarily restricted net assets because they are still restricted for that purpose until you have spent them on that purpose. And then if there's no specified purpose or it is for general operations, then you can go ahead and record that into unrestricted net assets. And then those earnings are basically available to use right away for anything, whether it be administrative or program, because it's for general operations. So, as I've mentioned in previous presentations, I think an example is the best way to look at most things. So let's look at an example. So the Leaf and Bean Conservatory received a contribution to provide internships to high-performing horticulture students. The agreement stipulated that the donation of $1.5 million be provided in 3 payments of $500,000. to be permanent restricted, and that 20% of the earnings for the previous year to be reinvested into the corpus by January 31st the following year. And the first payment was included with the agreement. So how would we record the initial contribution? Well, we are of course going to record the cash as a debit, then pledges receivable, we're going to record the remaining receivable of $1 million, and we're going to record that into donor restricted contributions permanent, which is a contribution account. We like to break it up and say permanent so that we know that when we go to do our net assets, that's going to be part of permanent. That's just a nice little way to identify that along with our net assets roll forward. So we're going to credit that for the revenue of $1.5 million. Then we receive eventually the final of the 3 payments. We're assuming this is all within the course of a year. They made the donation at the beginning of the year, and throughout the year, this is the final payment. And we're just going to record a debit of the remaining $500,000 to checking, and then reduce our pledges receivable by that remaining $500,000. And I like to have a description, like in the first one, it said first of 3 payments. This one is the final of 3 payments. That way you know where you're at on that. You don't have to try and count them up. When you run a report, you'll see them easily. All right, so let's continue with this for simplicity's sake. The next year on January 31st, the conservatory records the earnings of dividends and interest for the prior year. In total, it earns 7% or $105,000 on the entire corpus. Now, usually you're going to be recording these things on a quarterly basis, but for simplicity, we're going to do it on an annual basis in this example. So how would the conservatory record these earnings? So first, you want to record the earnings that you've gotten, and we're assuming that we're not reinvesting these dividends. If you have an arrangement like that, it's still going to be a similar transaction, but you might not record anything to checking. You might just increase your investments account. So here we're assuming it's cash, it's not being reinvested because we're going to be able to use it, so we want to be able to take it out. So we record $105,000 into a debit for checking account, and our investment earnings, we credit that for $105,000 to record that revenue. And we like to include a description of year 1 earnings. It's not necessary, but it's helpful if we're doing quarterly. I'd like to say Q1, Q2, Q3, Q4, maybe even have the year there, Q1 2022. And we are including the class because it makes it easier for us to track. Of course, we're going to need to move these into our net assets account, so that, or out of unrestricted net assets because they are restricted. So first we would have to figure out the 20% earnings that needs to be permanently restricted, added to the corpus, and reinvested. So we figure that out. So we've got that figured out here. So first, we're going to debit our net assets without donor restrictions for the full $105,000. And then we're going to credit net assets with donor restrictions for $84,000. And we could just say temporary there if we wanted to. And then we're going to credit net assets with donor restrictions permanent worth $21,000 or that 20%, and we will want to reinvest that. So we can use up to $84,000 right now for internships. So we could hire a few people to do internships during the summer, and we might not spend it all. That's okay. It's still going to remain there until we have used it, unless there's a stipulation that we have to use the full amount every year. And I have not seen that in the past. So some other considerations when thinking about our permanently restricted funds. First, we need to be aware of any state regulations for endowments, and it varies by state. There is a multitude of information. There's plentiful information on the internet if you just search for the state that you're looking for regulations on, or even just search endowment regulations. And a lot of these are going to fall under the Uniform Prudent Management of Institutional Funds Act, otherwise known as UPMIFA. And this is going to give you, basically, it has criteria of managing endowments and managing permanently restricted endowments. So you should be following these, and if you're putting together financial statements, it's good to disclose these. It's a required disclosure. Your accounting it includes accounting policies, investment policies, all these sorts of things that really affect the institutional endowments or funds. So I would just say be aware of those, and if you do get anything like this, you can reach out to somebody, or you can go online, you can read a little bit more about it, and then maybe you can kind of work on a policy to put in place. So then let's talk about, for a few minutes, board designated funds. So what are they? Well, it's really not uncommon for the board of directors to want to segregate funds for a specific purpose or for an operating reserve. And sometimes what I've seen is some confusion about whether these funds are designated, if they are actually restricted or unrestricted. The truth is if the board designates funds or restricts funds, it's still unrestricted. So when you're putting together your statement of financial position, you would just break it out under unrestricted or net assets without donor restrictions. Then when you get down to net assets with donor restrictions, you can break out the temporary and the permanent restrictions. So when we're thinking about it, people may say, well, why? Why is it not restricted? The board put a restriction on it. Well, they designated it for a specific purpose, but since they designated, they can always remove that designation, take it out, say we've already met our needs for that. Why it's not donor restricted. And when we're recording these, some of the best practices are to just be explicit in our labeling. So I would like to use something, especially when accounting for it and when presenting it on the financial statement, something where I'd say net assets without donor restrictions dash board restricted or board designated, or net assets without donor restrictions dash reserve or operating reserve. That way it's really easy to distinguish. You can see it there, and you can see your total unrestricted net assets. So in summary, from time to time, donors are going to make they're going to want to make a long-lasting contribution to an organization, which is often in the form of a permanently restricted endowment or contribution, and oftentimes these will be for a specific purpose and have specific terms that must be maintained. So it's really important to read the agreement and make sure that you take notes, have notes that are properly maintained and properly account for the corpus and any earnings. And likewise, the board of directors may at times like to designate funds for specific purposes. And while they're not truly designated, it is helpful to maintain these in appropriate labeled accounts, maintain documentation of how the board intends to use or add to these funds. So I hope you've enjoyed this and found it informational. And if you need any accounting services for your nonprofit, please reach out to me at silverspringaccounting.com, and I would be happy to speak with you and find out what your needs are and what it is I can assist you with. So take care.